For somebody starting out now, a lot of the things we look for is I want to flip, I want to day trade, and they do a lot of these things that you can make money with, but they do take time. And a lot of the people starting out, they don't have that. They're trying to find a way to get their time back. Do you have any maybe entry level things that if somebody's starting out and maybe they have like under 100 grand to start out with, and maybe they already have a job and a family, what are some ways they can start to invest, or maybe some things that you would suggest they look into to start to build that track out?
Yeah, one thing I would say is there's a big difference between efficient markets and inefficient markets. So the likelihood that someone succeeds at day trading is very low. And I'll explain that. The likelihood that someone succeeds in real estate is way higher. All right. So let me explain the two. The stock market is the most efficient vehicle out there. Like it is so efficient. If you read the book Flash Boys by Michael Lewis, you will learn why you are never going to have an edge. Okay. If you're going to invest in the stock market, it should be long term. It should be based on a long term horizon, not day trading. You should do it in indexes. You should actually do it yourself via pay an advisor to do it. And here's the math on that. Less than 1% of all money managers over the last 30 years have outperformed the S&P 500 index. So most people pay more money to have their money professionally managed to make a lesser return. It makes no sense in the world. Most people don't realize that's the case. But if you think from an efficiency standpoint, the people you're competing against in day trading, they have algorithms, they have quants that have built algorithms using AI that can trade 1,000 times to your one trade. They're micro trade. Like you have to be a true outlier to be able to get ahead as a day trader versus real estate, private equity. Like we're talking about super inefficient markets. Why did someone start their company in the first place? Because the market was inefficient. They found an opportunity to be able to exploit some area of that market, right? And so like real estate, why do we love real estate? Because it's inefficient, because you can buy from baby boomers who are looking to retire that don't even use technology, still use pencil and paper. They don't even have accurate financials or detailed financials. There's no software involved, right? Like we could go on and on. Well, you could buy that asset. You could layer in technology. You can layer in, financials. You can layer in, software. You can put in simple like protocols that can really help you understand what's happening on a much shorter time frame and be able to react and be proactive. So, that's why these cap rates that you see, there's so much opportunity there, right? Well, in certain real estate asset classes, and we'll see them compress and we'll see them expand. And then the other thing to just remember is monetary supply expands, right? We print more money, asset values expand. And so to sit in cash, you're losing money. To buy assets, you're keeping up with at least what inflation is, most likely, or at least the degree of quantitative easing. I would imagine we're going to be doing more quantitative easing here. We're going to lower interest rates. I mean, I think we've already signaled as such, just based on what Besant has said and what the market looks like and the short-term shore-ups that the government is doing, that the Treasury is doing right now. So one thing I would say to the person that's sitting out there with $100,000 is might not make sense to put it all in one place. Maybe you put it in a few different places. The wealthiest people in the world have generally 2 to 5% of their net worth in Bitcoin. Not a bad place to at least pick something up there, right? And then figure out, a real estate deal with someone that has 5 or 10 or 15 or 20 deals that have gone full cycle with a great track record, or some sort of private equity investment. We talked about the stock market having about 4,000 companies and they have all these hoops they have to jump through. It takes 4 years, $40 million. And then once you're listed, it costs all this money and all these things, quarterly earnings, yada, yada, yada. You stay private. There's a lot more you can do. And private companies, there's like 400, I think it's like 400 million worldwide of like small, medium private companies. And so like even inside the US, you've got, just tons, like 40 million companies. So it's like the opportunity to invest on the private side, like there are so many more opportunities that exist, right? The percentage of the 4,000 publicly listed companies is less than 1% of the total number of companies in the US. So it's like for those that are just focused on the stock market, you get less than 1% and closer to, it's literally like 0.016% of the total companies available that you could invest in. That does not sound like a successful trade to me.